Hello, everyone, and welcome to another Coffee with Carl. I am your host, Carl Zoellner, one of the attorneys with Anderson Business Advisors. And today I wanted to spend a little time talking about the difference between tax planning and tax preparation. Okay, so the easiest way I always try to describe the difference between the two is tax preparation is when you bring your box of receipts into your accountant. So any of you use chain preparers, any of you bring their receipts into there, that is basic tax prep. You're just asking people to fill out the boxes for you, basically. Now, tax planning is actually something that takes course over the course of a year or several years, and that's the one you actually get the real net effect out of when you're trying to actually save on taxes. Now, on average, when we look at our clients, we're looking at about an hour of planning time equating to about $1,000 in savings and tax. It can be much more than that as well, just depending on the type of assets you have, what strategy we're trying to fulfill. Are you a high W-2 earner? And all of those different factors play into that mix. But on average, some planning generally goes quite a long way as far as what you're planning to do with your taxes. So when we talk about going to a chain preparer, something like this, I'm guilty. I've gone to a chain preparer before when I did my taxes, but it's important to note who you're working with when you're talking about your chain preparers. So those of you who may have seen me speak in person or heard a little bit about me, before I was an attorney, when I graduated from undergrad, it was in '07. And the market was not so hot in '07. So I actually started working in the bar and nightclub industry while all my buddies were moving home to live with their parents. The hardest time during that season for us, when I was talking about keeping employees and maintaining sort of our average daily workflow, was that during that time, a lot of my employees would run off and go do tax prep. So a lot of your chain preparers, this isn't necessarily a knock on the chain preparers, but we sort of think of when we pay people to do things that we don't want to do for ourselves as they're always got some kind of basis of knowledge. My barbacks, waitresses, bartenders, all those folks are actually the ones a lot of times that are doing the tax prep during tax prep season. Going hand in hand with that, the IRS at one point did sort of a accuracy audit with those chain preparers office, and they found even for business returns that the average accuracy rate on a business return through chain preparers is about 0%. Okay, this is not to freak any of you out, but this is just to emphasize the importance of working with someone who's doing what you're doing and works with people who are doing what you're doing. Here at Anderson, we do thousands of business returns a year, and quite frankly, we just find things that a lot of people don't, especially when we're talking real estate, and those CPAs who may not be experienced in real estate, don't own real estate, don't work with enough real estate investors in order to capture all the different expenses. But this tax planning, like I mentioned, it is an ongoing process. So you want to work with somebody who's incredibly used to working with all the different type of deductions, things that are available to you. A couple of things that are coming, off the top of my head here are qualified opportunity zones, qualified opportunity funds. We also look at doing annually sort of we annually use about 14 days out of the 280A deduction. Excuse me, the 280A exclusion, which basically says you can rent your personal residence to your own corporation, which is nice because ultimately you get to double dip in that you get to get 14 days of tax-free income, as well as it's a deduction to your corporation that you own. So there's lots of different tools like that can be in an investor's toolbox, whether that's if you're a stock trader, whether you're a real estate professional, whether you just have high W-2 income. There's actually a few things we can actually do with W-2 income, which normally is the biggest stumbling block for most folks. We can even look at, say, setting up a nonprofit where this year you could donate up to 60% of your AGI to a nonprofit, which also can invest in real estate. But there's like I mentioned, the world is sort of an endless world of the different things that are available to you, but it's really about sitting down and having that time and doing some planning versus just dumping your receipts on some poor tax preparer and hoping they're going to make a miracle happen. So That's my 5 minutes for Coffee with Carl today. Hope y'all enjoyed the episode. As always, please, if you have more questions on taxes or if you have any legal questions or would like a consult, you're always more than welcome to get a hold of us at our number at Anderson Advisors, or go online at andersonadvisors.com and we can actually click to schedule you for a consult and draw you up a blueprint of what works for you. Once again, please take advantage of all of our free content. And like I said, if you have any questions, just let us know. Thanks. See you next episode.